Let's welcome on board Sudip Bandyopadhyay as well and find out what his view is. Sudip, hi, afternoon. Just looking at the FII trend and the buy figure, at least since March 20th, one is wondering whether they are here for good.
Definitely FIIs are interested in India. I think a lot of things have worked in India's favor. Inflation coming down in India is definitely a positive, which clearly indicates that RBI will be in a position to cut rates, which should again give impetus for growth in the economy. So, domestic factors are working all right. Of course, the global issues are huge and in everybody's mind. We were just discussing tariffs, and 2nd April is around the corner. So one has to wait and watch and see what's going to happen on 2nd April. But end of the day, I think impact on India will be limited. Direct impact rather will be limited because India is not a very large trading partner of US and vice versa. However, if there is a global trade war and which escalates beyond control, I think that will affect significantly global growth, and that in turn will affect India. May not be directly, but indirectly India will get impacted. So FIIs are waiting and watching, and they have started nibbling in, is what I would say. But they are still cautious and kind of risk averse at this stage. That's what I would say.
Right. Sudip, good afternoon. Cheryl is joining in the conversation. I wanted your view actually on the power space, because that was one of these narrative go-to sector actually last year. You saw a correction also play out in the entire power theme. Now, this is one of the sectors that has actually seen a good bounce back with the rest of the market. What's your take now on the power space? Do you think it's an attractive level? One should actually take some, or rather, go ahead and buy some of these counters right now?
Well, absolutely. I think we have been positive on power sector for last 1.5 to 2 years, and we maintain our strong positive view on this sector. There's a structural change happening as far as power in India is concerned. The demand has gone up significantly, and every segment of this sector, whether it's power generation, transmission, power financials, power ancillaries, power distributors, everywhere there is a strong demand, and there is enough and more opportunities for expansion and growing capacities and catering to the demand of the enhanced overall power demand in the economy. So we continue to remain positive. NTPC at current levels, definitely a good buy from a long-term investor's point of view. They're the leading generator of power in the country, fantastic backward forward linkages, and has a potential to significantly move up from current levels in about a year's period's time. Look at the financials. I think the amount of incremental power capacity which needs to come up over the next 5 years is huge, and that demand, the financing demand for that, cannot be met by banks. So obviously the power financials will play a significant role. So whether it's a PFC, REC, or even IREDA, I think deserves a look, and it's worth definitely buying from a long-term perspective.
Yeah, it's really all about that. In fact, the tight power market, the structural growth, all of them make a compelling case for the entire power sector. And of course, after the recent market correction, you are looking at compelling valuations. I think it's really a play of valuations that you need to really look out for within power. It's a given that it's a structural story, but yeah, does sometimes warrant caution when the valuations do get exorbitant. But Kunal, you've been also very bullish on NTPC, right? And the charts, barring today's correction, what are the charts holding up for in the short term as well as the medium term?
Yeah, it looks very attractive. In fact, NTPC, and you don't see stocks like NTPC falling by 25-30% in a span of 3-6 months. They are more prone towards very subtle kind of uptrends, something which are very, very slow. You don't spot those patterns very clearly for these stocks, and something which are which are durable, and they last for months and quarters to on a trot. So for NTPC, I think this last 30% correction, I think has to be taken with both hands. From 440 odd levels, I think if I'm not wrong, to 320, 30 thereabouts is where the stock had corrected. And you see the volume patterns, you see the double bottom pattern for NTPC, the recent high for the stock, and the resistance the stock has developed at the 200-day moving average. All of that indicates that it's a very strong chart in the making. I think dips, say even if it comes back to say another 10 points on the downside closer to 340 odd mark or slightly lower than that, that should be taken as very strong buying opportunities, especially from a medium to long term play.
All right, so that's the word coming in for NTPC. Coming to you, Nuresh, I wanted your view on the real estate pack. And in real estate pack, I want to primarily talk about actually Aditya Birla Real Estate, erstwhile known as Century Textile. How is that one looking to you? It's a lot of news flow have been a positive one for this one. Right now, it's actually given up all of this morning gains. How are the charts looking for this?
So technically, after a correction from 3100 down to 1800, the stock is trying to form a base. We've made three bottoms around that 1750, 1800 mark. And on the upside, 2200 is a resistance. So looks like a case wherein the stock could consolidate and not really rally up so soon. So a consolidation phase, maybe a short-term bottom could already be in place, and 1750, 1800 should hold. But a momentum move is some time away.
All right, so that's the take coming on the real estate space. Sudip, what's your take actually on the entire real estate pack? No doubt the sales have not been that great of late, but if you look at the luxury market, that one is booming, at least in the NCR region. That's what the reports are indicating. What's your take on real estate and how should one play this theme?
You hit the nail on the head. I think luxury real estate is doing really well, particularly in NCR. And obviously, DLF is buy. I think the kind of inventory they have, land bank they have, and the kind of potential they're sitting on. I think somebody looking at building a long-term portfolio, wanting a real estate exposure, DLF definitely should be included in that portfolio. As far as other markets are concerned, I think the way things are moving, I don't see too much of a problem in real estate segment. Also, remember, interest rates in the economy are coming down, and they will continue to come down for some time. And whenever interest rates in the economy comes down, it benefits real estate directly as well as indirectly. So I am not in the camp which believes that there is going to be some challenges in real estate. I think we are in the in a cycle, a positive cycle for real estate, and we are probably in the mid cycle. I think the rally has many legs to run even now. Yes, there will be dips and volatility in between, but I think there is absolutely nothing to be afraid or scared as far as real estate is concerned. When there is a sharp market correction, when there is a slowdown in the economy, real estate also shows a bit of weakness. But I think we are on a good wicket if you consider medium to long term.
Next month, and that entire income tax saving as well is going to flow in. You think that's already priced in by some of these FMCG and cap goods players, or do you think there could be some more headroom in these segments?
Asha, is that for me?
Yes, Sudip, for you.
Sorry, can you repeat the question? I didn't get the first part.
No, I was just wondering, the entire FMCG and consumer goods segment, because of the income tax saving, do you think that move is behind us, or could there be further headroom in these segments?
Well, I think that move is behind us, definitely. There are concerns around how monsoon is and how demand is going to pick up. The consumer durables sector, there was some commentary which was coming yesterday, which doesn't paint a too good a picture. The demand hasn't apparently picked up that much. And I think we have to wait for the demand to pick up. I think the real challenge for FMCG as well as consumer durable was demand. If and when demand picks up, I think the segment will come out. Yes, the tax benefit given by the government in the last budget will percolate down to individuals in the next fiscal, and I'm sure consumer durables will benefit out of that. But I think there is a lag for that to actually fructify on ground. We have to wait for demand, and I expect that the interest rates coming down in the economy, as well as expectation of a good monsoon, should probably cheer the FMCG and consumer durables in Q1, late Q1 and Q2.
Coming in on the consumer durable space. Kunal, anything that's looking good to you on the charts right now from the consumer durable space? A vast one, I know that, but what's your take?
Yeah, I think few odd names are, but I was actually looking at the underperformance for in the consumer durable space in this leg of uptrend, and most of the stocks in that space have actually disappointed in terms of the price or expected price up move. I was actually looking at least so when the indices come back into a 5% to 10% kind of a band of price uptick, then you're looking at least 8 to 10% uptick into many of these stocks. from their previous swing lows. More importantly, I think you're looking at potential breakouts for these stocks from their previous swing highs, but we've not seen that happening for the space as such. So I would probably be a bit more reserved into the space.
Okay, a little bit more reserved when it comes to cap goods, at least, or consumer goods. I beg your pardon. We'll take a very quick break on that note, come right back. Okay, we will take the BTST trade, stand corrected at that. Naresh, what's on your list?
So first to be a buy on Bajaj Finserv, a breakout trade here, stop loss at 1930, target price of 2000. Second is a buy on IEX, which has made a strong recovery and could be setting up for a move going forward, stop loss at 175, target price of 182.
Your strategies.
So I'll go with the buy on Trent, something which I discussed in the morning also. Looks attractive at current levels. Would look out for targets in the range of 5,500. Stop loss now could be kept at 5,200. And SBI Cards is something which continues to look extremely strong. The stock is on the verge of a pennant as well as a triangular pattern breakout. So targets of 920, stop loss at 850.
Sudip, I want to pick up on the entire wire and cable segment. Now with the Adani entry as well into the space and the correction clearly played out in the entire segment as well, do you think any of them makes it to the core portfolio, or would you say need to wait it out? This could very well be the Birla effect on the Asian Paints kind of a story or case, and we may see a prolonged derating for some of these names like a Polycab, a KEI, or an RR Cable.
Cables and where segment is concerned, I'll be extremely cautious. And you're right, we are probably seeing a replay of the paints, what happened in the paint segment with the entry of Aditya Birla Group. With both Birlas as well as Adani's entering the cables and wire space, I think the competition will be hotting up significantly. They have declared that price competition is not the way forward, but I don't believe that will be followed on ground when actually competition starts, when the facilities are ready. So yes, one needs to be cautious as far as the existing wire and cable players are concerned. And remember, they were not quoting at a cheap valuation. They were actually significantly richly valued. So a bit of correction was anyway due, and this announcement, both two announcements have really, set the cat among the pigeons. So we have to be careful here. There is no point trying to do value buying here yet.
Value buying yet, at least in the cables and wires segment, given the fact that not one but two competitors, new competitors trying to enter that market. Naresh, on the charts, any of these counters look good, at least for trading purpose?
Because after that fall, they've not seen a sharp recovery as such. It's just that after such a fall, the short trades do not become risk reward. So avoidable, not a long.
Is what Naresh is saying about that particular space. Let's just take a look at what Siemens is doing in trade today, given the fact that you have NCLT that has approved the demerger of energy business. This one is flying high in trade today, 5.8% uptick coming in for Siemens. Also, apart from that, take a look at Bharat Dynamics, what that one is doing, because the sizable order coming in for Bharat Dynamics as well. And also Ashok Leyland, because they've come out with the news that Hinduja Leyland will be allotting shares at a price of around 200 rupees per share. So Ashok Leyland over there actually given up those early morning gains. Remember, they've come out and they've outrightly refuted the fact that they are looking to acquire their majority stake in SML Isuzu. So yes, look at that counter as well, SML Isuzu, what that one is doing post the clarification coming in from Ashok Leyland, given the fact that they've staunchly and outrightly denied that particular move. Kunal, coming to you, what's your take coming in some of these CV players? When you talk about commercial vehicle space, likes of Ashok Leyland, for the matter of fact, Tata Motors, if you're looking at that particular arena of Tata Motors, how are these players looking to you?
So they're looking quite okay on the charts, not very exciting, frankly, Cheryl, because many of these stocks, in fact, the entire auto sector is going through a very tough time right now. I think except for Eicher Motors, of course, not the CV player, but that's the only stock which has done reasonably well. Most of the other stocks, whether it's M&M, Maruti, Escorts, Tata Motors, Ashok Leyland, also to a larger extent, Auto Ank names, all of these stocks have underperformed quite significantly. And even in this leg of uptrend, we've not seen any major bounce. So what happens is either there is a price-wise bounce into these stocks, or there is an indicator-based bounce for these stocks, and that would probably help us determine the trajectory of the path going forward for these stocks. And in this case of a price uptrend for many of these names, we've just seen a more of a tepid bounce on the prices, not something which is strong on the indicator front. And that's why I believe what you're seeing is that these stocks, they tend to move up higher in a couple of days when the markets are extremely strong, and then the momentum just fades away when the market also gets into a corrective phase. So that's generally an indication that the sector would go into its own drift, consolidate current levels. Maybe I think another 4-5% on the upside, but broadly I think from here to the next 2 to 3 months, you could probably expect that these stocks may slightly underperform.
That's the take coming in some of these auto plays. But Sudip, since banks and financials at large seem to be the consensus trade, tell us what your preferred list is within NBFCs and the banking pack.
Well, as far as banking is concerned, I do like SBI. I think a lot of things are going good. Overall credit demand is strong. Asset quality has improved. They don't have too much of unsecured or a microfinance exposure to worry about. Subsidiaries are doing exceedingly well, and valuation-wise, it does look attractive. Of course, interest rates are going to come down, and that does help efficient banks for a period. So all put together, SBI definitely is a good buy at current levels. As far as NBFCs are concerned, I do like the gold loan companies. Recent RBI change has probably put a slight disadvantage in terms of cost when the portfolio sale by gold loan NBFC gold loan companies will not be treated as priority sector loans in banks' books. So that's a bit of a dampener in terms of cost, but otherwise I think both the gold loan NBFCs, Muthoot as well as Manappuram, should be looked at. I think the demand is robust, gold prices are zooming, and I think they have gone over that regulatory challenges and regulatory issues which they were facing. So considering all that, I think both of them deserve a look from a portfolio point of view.
Okay, that's the take coming in on where the entire NBFC segment is headed and what's looking good within banks as per Sudip. But Naresh, what's your own sense given the move that has already taken place in Manappuram and Muthoot? Where do you see these stocks headed next?
So it could be Manappuram, which looks interesting because that has finally hit a new all-time high after 5 years. So on dips going forward for the long term, it could be Manappuram that looks interesting in terms of outperformance, and Muthoot has been a consistent performer, so both remain a buy on dips.
All right, so that's the take coming in on gold loan financiers. Coming to you, Sudip, I wanted your view coming in for some of these counters that have actually reacted to the developments when you talk about the EV battery manufacturing, like for the likes of Exide, or for the matter of fact, Amara Raja. We do speak at length when you talk about auto players. We speak at length when you talk about two-wheeler players. But yes, when you talk about auto components, this one is a very critical and crucial one.
Absolutely right. And if you were talking about EV, I think the most important thing is the battery. And that's what the thing which actually takes the vehicle forward. And this is a very, very critical component for an EV. So I think the government of India is trying to do the right thing by providing incentive for domestic EV battery manufacturing. And I think it's in the right track. Of course, both Exide as well as Amara Raja Energy, I think they are setting up large plans for EV battery manufacturing. They have the skill sets of battery marketing and acting as OEM for the IC engine companies. I'm sure they will, with a bit of tweak, do a great job as far as EV batteries are concerned also. And with all these incentives and exemptions on import of capital goods for EV battery manufacturing, I think things start looking even better for both these companies. So I have been positive on Exide for a long time, and now I'm positive on Amara Raja as well. So both can be looked at from a long-term perspective. I think that's the future. So one has to look at that.
To have you on the show. Thanks as always for your time.